Hi folks, this is a late in the evening preview for the video I'm doing better on Facebook. It's been about a week since we started this, me and Tanya, about probably a week and a half. We've had a whole bunch of technical difficulties, but finally we got it sorted out and I was just finished editing it this evening, so I hope you enjoy it. It'll be coming up shortly. Okay, thanks again guys. If you need me, 604-671-7840. And yep, I've got my grumpy shirt on.
Okay, Tanya
Right,
from
okay.
Right Way.
Hi guys, this is take number 5 now. We're having fun doing these. So I'm sitting here with Tanya from Right Side Mortgage. Okay. Okay, I would say,
Right
okay,
Way
Right Way
Mortgage,
Mortgage. I'll get
yes.
this right one day. So I'm sitting here with Tanya from Right Way Mortgage. Okay. And,
Doesn't really matter the
well,
name, I
it
guess.
might be someone needs to look you up, but they shouldn't need to look you up because at the end of this
Yeah,
little
that's
video will
true.
be her telephone number. And I highly recommend you call her because she's a
Yes.
very good mortgage broker. Okay.
Thank
And if you
you.
want to see what
Thank
some
you.
people think about her, I just put a testimonial up on our website from a young couple that just dealt with Tanya and myself, and they're over the moon with it. Anyway, to get down to the point, the main reason for this video is to Tanya to explain what the changes with CMHC the other week, which sounded scary, but in actual fact are not. Okay, so Tanya, over to you.
Yeah, exactly. So I'm getting a lot of questions from clients as well, saying that they've heard about lenders getting harder. It's getting harder to qualify. So there was that scare earlier in the month where CMHC came out and indicated that they were going to change their qualifying criteria. So there's three things that they announced. One was that they were no longer going to allow borrowed down payment. Two, they were changing the ratio numbers that they look at in qualifying. So currently 44% of your gross income could go to your housing costs plus any credit card or loan debts. They reduced that down to 42%. They also reduced the what's called the gross debt service ratio, which is the ratio they use, which is basically your housing costs. So your property taxes, the mortgage payment based on the stress test, and heat and strata fees if those are applicable. So the current rule is 39% of your gross income could go to those costs. They've reduced it to 35%. The other part of that was they were requiring one borrower to have a minimum credit score of 680. So that's what CMHC is doing. 2 days later, Genworth Canada and Canada Guarantee, who are two other insurers that are the private insurers, they are not making any of those changes. So bottom line, it is not going to really affect if anybody has a mortgage that doesn't fit the CMHC guidelines, which by the way, don't start till July 1st. The lender will just send it to the other two insurers. And again, this is for only high ratio mortgages. So I've had a lot of questions, as I said, about this. And people that have conventional financing, which means you have 20% or more, or if you're doing a refinance or anything like that, this has no bearing on what is going on for you guys. So nothing is changing that way at
So
all.
are the banks aren't changing their lending criteria either? Perfect.
No, no, it's just the CMHC. And yeah, and I mean, I know you're busy and rates have been coming down like crazy. So if you have a rate existing mortgage and a rate over 3%, you should definitely look into um, finding out if it makes sense to pay that penalty and get out of it, because we are starting to see some record
Yeah.
low rates
And
again.
talking of penalties, pardon me, one of the things I'm seeing is there is some really good mortgages right. I think there's a 1.99 with CIBC or somebody out there.
Yeah, it's
It's
HSBC, but again, yeah, you got to watch out for those advertised rates. It's very confusing to consumers because there are so many different rates for different things. So that is a high ratio mortgage rate. Um, there's different rates for high ratio, there's different rates for conventional, there's different rates for 25-year amortizations, different rates for 30. So the best thing is to contact your mortgage professional, whoever you're working with, and find out exactly what those are about, because there's more to it. Sometimes those come with other little things that it's not clear on when you just see a number. And rate isn't always the most important part either. The lender that you work with is also important, the service that you get from that lender. you know, throughout the mortgage
Well,
and life
that's
of
the
the
thing,
mortgage
because sometimes on
too.
the
So
back end, if you're not careful, you get hammered with a really big penalty. And by big penalty,
penalty
yeah,
or other fees, you know, there's some mortgage companies, and mortgage companies are great, so don't, like, I'm not saying anything, and there's big banks that have
yep,
their ways as well. It's just so important to know, and deal with a mortgage professional that has experience, and knows these things, because for example, there's one place where they charge you to change your mortgage payment. In my opinion, I don't like that. Like, if they want to change from bi-weekly to weekly or whatever, they charge you. I personally don't deal with those types of lenders typically, unless there's no other option for the client. But yeah, it's important to know the ins and outs
yeah. Because what
of the
worries me
lender.
sometimes is, you take a 5-year fixed, and then 2.5 years down the road, you've gone through a pandemic and you find you need a bigger place or something, and that penalty can be
Yeah.
crippling. And we're talking 30,000 or more
Yeah.
sometimes, and that's just a crippling thing
Well,
for you.
yeah, pen, yeah, the language around penalties is, so, you know, every lender will say that it's a 3-month interest penalty or interest rate differential, whichever is greater. But the back end calculation of that penalty can be very, very different from lender to lender. So it's important that, you know, whoever you're dealing with, whether it be in the branch, like a branch person, like at a bank or a mortgage broker, you need to make sure that's explained to you how that works at the end of the day. So yeah, that could be a big,
Yep,
big
definitely.
difference.
Because let's make no two bones about it, guys. We do not know where we're going to be. I have some people that change a house within 2 or 3 years, and that penalty can really impact. It can wipe out the equity they've made in that 2 3 years. Okay.
Well, and most lenders have an option to either blend, or they could port their mortgage and work around penalties. But sometimes it's not possible. So, for example, maybe the situation for that client has changed and they no longer qualify at that bank. And then you got to move them to another lender. Now you're going to be paying that penalty in order to qualify for that other mortgage. And again, setting things up, you know, if you're going to move in 2 years and you know you're going to move in 2 years, maybe a 5-year fixed isn't your best. You need to talk to a mortgage professional. That's their
And I think that's
expertise. And then so Tony, I wanted to ask you quickly just about the market, because CMHC had indicated with these changes that they thought that the market prices were going to drop to up to 18% over the next 2 years.
I
So what are your thoughts on
my
that,
thoughts
and
are,
what's happening for
I
you out
do not
there?
see that. I don't understand whether even coming up with a figure 18% drop. Yeah, there's going to be a bit of a drop at some point on some aspects of it, but when you've got historically low interest rates, you're not going to get a massive drop. But the thing is, what we've got right now is we've
Yeah.
got a I don't know what the word for it is, a scenario which we've never seen before in our lives. Is people, a hell of a lot of people lost their jobs. Some think they're coming back. Some are surprised they're not, and they're not back to work. Everybody as it is right now. But the Canadian government has done a massive economic influx to the economy, and we're not unknown territory.
Yeah.
I don't see it dropping dramatically. It may drop a little bit in some areas on certain things,
Yeah.
because when the deferral
Yeah.
period for the mortgage is finished, there may be some people that are really in a corner.
Yeah. Which just got
Yep. Okay, it's
extended.
another problem. Yeah, just got extended.
Yeah.
That's going to have an
Yeah.
impact because we don't really know what's going to happen here. So there could be some people that face themselves to be really, really tight and
Yeah.
they've got to unload quick. Yep, that's going to bring the prices down. There could be some people that decide, hell, I can't stand
Yeah.
being locked in with somebody. We're getting divorced, we're splitting. That could burst it. Then there's going to be people, hey, our family's expanding. We need a bigger place. So I don't think we're going to have that dramatic a time. I really don't. It's yeah, so this
Yeah.
18%, I think, is just them scaring people for some reason and trying not to take on too much debt. But like I said, the rates are so
Yeah.
low.
I'd have to agree, because you're so
Yeah,
busy
I mean,
too, right?
me
Yeah.
and Glenn the other weekend, we did 3
Yeah.
deals one weekend. And we haven't done that in ages. I was chatting with another realtor the weekend. She went
Yeah.
out and showed 10 places at the weekend. By the end of the weekend, 8 of those had offers on them. So Yeah, the market's busy out there.
Yeah.
So if you are thinking of doing something, guys, sooner rather than later, pitter patter, get at her, as they say. That's what I'm believing.
Yeah.
You know, and getting back to.
Well, and there's buyers out there that can't find
That's the
anything
other
either,
problem.
right? So if you want to sell, now might be
Inventory
the
is
time.
tight. So yeah, it is a good time to put your house on the market without a doubt. You know, but back to what Tanya was saying about having a good expert. I think the young couple I just dealt with, Melissa and Glenn, I put a little video testimony up on our website from them. And one of the things they said was they appreciated everybody I referred them to because they're experts in their area. And I think that's a big, important part of it nowadays is make sure you're dealing with experts, the mortgage broker, the inspector, insurance broker, this sort of stuff. Yeah. So get yourselves prepared.
Like it's
a little team basically is what it is. And they were amazed how smooth things went because they had experts helping them. So like Tanya did a great job in the financing, pillar to post to the inspection. And when we did the inspection, we found a problem because pillar to post have an infrared camera. And we found out the heating wasn't working downstairs because of this camera. Otherwise, we wouldn't have known.
Oh, wow.
But it's all fixed, so everybody's happy. It's no problem.
Wow.
Seller didn't know it. So, hey, problem solved. And that's the way it goes.
Well, and that's a good point because I've also had, buyers that they think they have to pay for a realtor, so maybe shy away from that when they're looking for something, even if it's newer construction or what have you. And it's so important to have a realtor when you're buying as well, that's representing you and that you have that relationship with, because you're not paying for them and you need someone in your corner 100%, just like Len and Melissa.
And the same thing goes for mortgage brokers. You don't pay for them. They get paid by the lender.
Yes, so, thank you.
You can get these expert services for free. Okay.
Yeah, no, thanks for bringing that up because that's a common question that I get asked, and I'm always so surprised that so many people don't know that. 99% of the time there is no cost to you. It's it's more if you have to go to sort of these private type places, but it's always disclosed up front. But if you're just a regular, buyer and everything's smooth and you fit at a bank, then there's absolutely no cost to you. So
and further to that, so Tanya said they disclose what you're getting paid. Realtors have to disclose what they're getting paid as well, even though you yourself are not paying them on the purchase. Okay, it's the seller that pays that, but that's still disclosed to you what we're being paid. So everything's up front. Okay.
Yeah. Well, thanks for this little call today. We made it through, and we'll keep you guys updated with more stuff from Tony and I as things come out. So thanks for watching and have a great day.
Thanks a lot, guys. Cheers. Thanks, Tanya. Bye.
Bottom line is, you